Welcome, everyone. My guest today is Cade Thompson, Co-President and Chief Growth Officer at Rocktop Technologies, to talk about the intersection of AI and blockchain and why that combination is so powerful for mortgage companies. We featured Rocktop at our recent AI Summit, and I'm excited to further our conversation today. Cade, welcome to the podcast.
Hey, how are you?
I'm doing great. Really excited about this conversation. Definitely a topic that I know everyone's going to be interested in. So first, let's start give us an overview of Rocktop Technologies and your mission.
Absolutely. Rocktop's been around for over 9 years now. We started off as a investor buying what I would say is the most complex assets that were in the market, and have over the last almost decade transitioned now to a solutions as a service firm. And the way we think about solutions as a service is bringing our subject matter expertise on the one hand and our technology capabilities on the other, and bringing them together for solutions for the market. Our real mission here at Rocktop is to digitize and transform the way mortgages and fixed income assets are traded and managed, ultimately to drive better liquidity and portability, which will increase returns for investors. And we do that in a number of ways.
No, thanks for that. Just so everybody kind of has the background. And then, maybe we can talk about specific use cases for Gen AI in housing, especially for operational efficiency. Like everybody, I think everyone now is very familiar with Gen AI in some ways, like on an individual level, but how they're going to apply that at their business is kind of something different.
Yeah, so we take a very practical approach to generative AI. I mean, first of all, generative AI is a big term. General artificial intelligence is even bigger term. The way we think about generative AI is to really have an end in mind when you're starting off with how to deploy the technology. For us today, the number one thing we think the market is starving for is ways to increase scalability, operational efficiency. The market's been a bit rough for the last couple of years now. So we take generative AI tools along with other technology and put it together to identify ways where we can either reduce risk, increase efficiency, increase timelines, speed up timelines. There's a lot of different ways to go about that. Some companies out there in the market today build software as a service applications and will license those applications to end users that can use it for whatever the purpose is, the utility of the platform. From our perspective, we've spent the last 2 years developing what we call building blocks. And those building blocks are really just componentized agents that do different things, whether it's being able to extract data from a document, being able to do sentiment analysis on text, being able to summarize text, generating microservices, being able to take text and create SQL queries so that you can access your data. These are all just building blocks. And the way that we do leverage those building blocks is we then put them together in different configurations to deliver products to the market, whether it's a QC product, whether it's a bankruptcy automation product, whether it's a servicing transfer product. We take those core building blocks and put them together to ultimately deliver solutions for the market.
I think the thing that is so valuable here is that you guys have a lot of experience in this space. What we see with a lot of companies who might be offering something with AI or Gen AI is they're pretty new to the mortgage space or to the very complex compliance things you have to do. And so I think that if I'm out there and I'm a lender or otherwise in the space, I'd be like, how do I know who you can trust, right? Because this is not, the technology is new, but it doesn't matter. I mean, the regulators have said they're going to be very strict about things.
Yeah, for sure. Listen, I think there's the argument that is a legitimate one to determine, should we insource this? Should we outsource this? Should we partner? What are the constraints and concerns around it? I think any firm in the market today that's not really even exploring generative AI is probably behind. Ultimately, where this goes and the power of it and what the regulatory environment does to impact the development and adoption of it, and we'll see what happens. But I think there are ways today to leverage generative AI tools that aren't really running the risk of any kind of hallucinations or bias or discriminatory practices that are very practical in nature, that historically we've built monolithic software applications or different technology tool sets using code to do these things. With generative AI and large language models, you can now do them much faster. The innovation speed is parabolic. And so, most people are looking to reduce their manual errors, speed up decision making, lower operational costs, gain deeper insights into their data. Those are all, I think, very good use cases for generative AI. And I think no matter whether you're going to insource it or outsource it, having some sort of baseline knowledge and understanding of its capabilities internally will maximize the value no matter which direction you go. And then ultimately, we'll see what happens with the regulatory environment as these products continue to roll out. It's happening today real time. So, it is a little bit of a TBD.
No, I think those are some great points. So, how are your typical customers looking to add Gen AI to their current tech stacks right now?
We were a participant in the most recent HousingWire AI Summit, and just listening to some of the other technical leaders in the business, I think most people today are leveraging the LLMs for aggregating core structured and unstructured data that's internal and proprietary to them in order to be able to give business users access to that data in a more efficient way. I've heard many people are building oracles or some sort of agent internally that you can query like a ChatGPT based upon being trained on or pointed at source documents that are servicing guides, policies and procedures, whatever it is that is feeding the model. And so I think a lot of people are starting there. There is a lot of work being done on the data extraction and blob management of a 275-page PDF. What do you do with that, and how do you optimize it? Because we all know the mortgage industry is still somewhat paper-centric. So I think there's some fringe things that are being explored with. What will be very interesting long-term is how they actually deploy the deeper learning aspects of the generative AI capabilities. There's an expectation that GPT-5 will be coming out sometime late this year, early next year, which will have another round of enhancements to its capabilities. So I haven't really heard the lender space or the servicer space doing too much with it. But people are starting to emerge right now with different application layers throughout the organization to really test to see how far they can take it. But it's very still early stage from our perspective.
I love that you say that, if people aren't at least looking at it internally, if they're not looking at some things they can do, it's very possible they're already behind. That's what I got out of the AI Summit, just hearing all you guys and other people on stage really feel like, yes, no one has it all figured out yet as far as like, oh, this is seamless or whatever. But if you're not even kind of on the train yet, it's moving so fast that it really is worrisome to me about how people are going to catch up.
Yeah, listen, it's very interesting. The mortgage industry at large, and I've been in the industry, started as an originator, owned a servicer, and been all throughout the different aspects of it. The mortgage industry is interesting because when we're in a trough, a production trough, everyone is very quick to say, oh, I've got to optimize or maximize my P&L, so therefore I need to cut expenses. And so the first thing that usually goes is generally R&D and technology type initiatives. And so then when you get into a frenzy with refinance boom or whatever the case is, everyone's too busy to really take the time to paint the airplane while you're flying it. So now is the time, because these tool sets aren't just another large fixed cost that you're adding to your P&L from one more disparate technology system that you're trying to bolt on to your ecosystem. These are opportunities for you to enhance your workforce, make them more productive, get them out of the minutia and raise them up to where they can be creative and make decisions and be strategic in their work every day, and ultimately create scale for you. When it does become a frenzy, you're able to scale up. So right now, every customer of ours that we're talking to, we're going and saying, listen, now is the time to invest in these tools, because if rates drop 50 basis points or 75 basis points, or there's a macroeconomic shift, being in a position to maximize that opportunity is critical. And oh, by the way, you probably can save a little bit of money right now in deploying some of this stuff. So that's really our perspective and kind of message to the market.
Well, I also feel like it's so interesting that, we've had different capabilities come online before, but nothing, in my opinion, like this fast that like it's its own variable that's saying, normally in a normal environment, you can take your time, you can do this, it's going to be rolling out. It's like, it's changing so fast. Everybody I talk to, I do these, the weekly technology talks and conversations, and every single person I talk to is like, the rate of change with Gen AI and what's possible is challenging for everyone. It's great. It's also challenging. And so I do think this is just a really unique time in the sense of like, if you're not thinking about this, it's going to be quickly too late. That's how I feel about it.
I think you're right. And ironically, just to kind of spin that around to how we think about it, when we call ourselves a solutions as a service firm, we're very intentional about that because we don't want to be in the trap of a software as a service firm, because the velocity of the innovation today commoditizes yesterday's product. Mm-hmm. And so if you go out and spend a year developing some platform that can do some set of functions and features, like we used to 10 years ago, and you had a moat around that, an intellectual property moat around what those functions and features were, you could create market share and demand for your product. At this point, the pace of the innovation is accelerating so fast. The only real intellectual property moat you have around generative AI is just to keep innovating and stay with the curve of the innovation. And so we think that as appliers of that innovation, which is our motto, innovation applied, we believe that staying right on that forefront and pushing the boundaries of what this technology can do and helping constituents adopt it fast is critical. Otherwise, there's going to be such a disparate range of people who have it and the people who don't have it, from a profitability standpoint, from a user experience standpoint, from even just a workforce sense of how they feel about their work and their job and the stuff they're doing every day compared to a highly innovative firm. And so there's a lot of implications around this technology, not just speeding up this QC process or making the origination underwriting go a little bit faster or better. There's a lot of implications that executives have to be thoughtful about in their business today with this technology specifically.
So let's bring up a word that for some people they call it a buzzword, or they might think like, oh, I know all about that or whatever. And that's, explain the basics of blockchain technology and distributed ledgers, because this is coming into new relevance, I think, but I'm not sure everybody knows that. They're like, wasn't that like 2 years ago? Isn't that what we were talking about 2 years ago? But they didn't do anything with it.
Yeah, it's an interesting concept. I mean, first of all, I would say most people associate blockchain with cryptocurrency. And that is certainly true. Cryptocurrency does use blockchain or distributed ledger technology, but really at its core, blockchain is a decentralized ledger for transactions. And the value of blockchain is the immutability of those transactions, the provenance of that transaction history. One of the biggest issues we have in the mortgage industry at large and fixed income at large is the trust of data. So investors, bondholders, diligence firms, originators, they spend a ton of time and money validating disparate data sources. And so if at some point you can actually trust the data when it's passing from person A to person B or servicing system A to B, and there's a ledger that keeps the history of that in an immutable fashion, it can absolutely decrease cost, increase speed of transfer, which will increase liquidity of the asset itself. And so blockchain is really just is a distributed ledger. It's what it is. Now, in addition to blockchain, when you take an asset, a mortgage file, back in the day, we used to have these folders with all the collateral documents and origination. If you think about taking all of the structured data, which would be the raw data, and the unstructured data, which are all those images, you can actually tokenize those assets, hash them and encrypt them, and put them on chain, and then subsequently get all data, whether it's from a servicer or custodian or whoever may be contributing to that asset, to ultimately build what we call the best asset, which is normalized, transparent, validated, and immutable data. And then from there, there's also concepts of smart contracts, which is just simply code that you can put in with the data on chain to do functional things. So fast forward 10 years from now, we firmly believe that blockchain provides the baseline data management ledger for what will be real-time trading of whole loan assets or MSR assets, where today that takes somewhere between 30 and 45 days. Investors today are waiting 45 days post-close month end to get their waterfall from their cash from remittances. All of that, all those timelines and paper and due diligence costs can be mitigated through the use of a technology like blockchain.
So how does your company utilize blockchain technology? Like how do your clients use that?
Yeah, so great question. I mean, today I would say it's early stage. Adoption is the biggest issue with blockchain. Most people don't see the relevance or the value of it. And then they go back to their desk and cuss at their data management because they can't get timely reports and it's not right. And then you're missing documents and trying to assign a loan or put a claim into HUD and you're missing stuff. So the reality of it is the almost similar to the generative AI. It's like people don't fully understand the value of the underlying technology to know how to apply it, particularly in their ecosystem that's been up and running from somewhere from 30 years, 50 years to 5. Once you have all those systems built out, it's hard to think about changing them. For us, we started at the very beginning. When we take on any kind of surveillance or asset management work for our customers, we bring all that data in from a number of different sources. It does not matter: origination data, servicing data, accounting data, due diligence data, custodial data, and we bring all of that in through our Elevate data management platform. Once we bring it through, we normalize it, we transform it, we validate that data using some generative AI tools, and then ultimately, once you have that clean asset, you have a digital representation or a vessel on chain to hold all that validated data and documents. From that point, then you're just dumping in servicing data that keeps your transaction ledger and balances tight over time. New documents come onto the chain, whether it's from a borrower or a trade or other diligence items. You can append documents onto the chain. And then you have a repository that's a living repository that grows in value over time, so that at any point someone wants to buy that asset, or you want to trade that asset, or you want to service transfer that asset, everything is all in one place and is completely immutable and valid. And so for us, we look at it as a tool to increase the underlying value of the assets that we manage today.
You make it sound easy, right? Or at least you lay out a vision that's like, you can see why that would be an advantage.
Yeah, no, for sure. I mean, listen, nothing is easy. I think it's the hard part for most people is to understand, like, okay, well, where does this fit into my ecosystem of Snowflake and SQL, Microsoft SQL databases and all of these software applications and my data warehouse and my data lake and all my business intelligence visualization applications. And the way we think about it is, if you just take a single loan and it's originated and it goes to servicer A, and then it goes to servicer B, and then it's sold, and then there's a handoff and something got missed, then it went to servicer C. Every one of those servicing systems may have different underlying ledgers. Like they could be on Sagent, they could be on MSP, they could be on FICS, they could be on whatever. And the transformation from servicer to servicer doesn't always get done perfectly. I know that's like a shock, but you lose integrity. It degrades as this thing goes on in time. And our thesis is an asset should grow in value over time because you're getting more information about it. You can make more informed decisions. You can do deeper analytics when you're pricing that because you have all of that clean, immutable data. So the underlying technology itself is fairly complex, and that's not something that I would even claim to be an expert at. We partnered with a firm called Liquify, and Ian Ferreira is the CEO over there, and they're doing phenomenal work. They've got over $8 billion on blockchain today. So it is growing quickly. So it's not easy, but it does require a bit of a vision to understand that you can look at data as a threat or an expense to asset management, or you can look at it as something that can create a premium for your asset. And if your costs are in the low basis points to do that, but it can drive 10 basis points or 15 basis points of value, then the ROI is there for looking into it.
So what are some of the key applications of blockchain that you're working on?
Well, for right now, I think the baseline, like first base, is just essentially creating the vessel with all of the data in there for ultimately to create portability in that asset. So that's first. The second is fractionalization. So if you think about today, a whole loan, you've got someone who wants to buy a mortgage, they have to buy the whole loan. Well, when you think about how securitizations are done, there's a series of bondholders on the back end of that own a fraction of the bond that is a pool of loans. And so there's a lot of work that gets done in investor reporting to basically say, okay, we've got X amount of cash flow coming in. Here's the waterfall from the securitization, and it's got to go through that waterfall to get to the individual bondholders. And that takes time. There's multiple counterparties involved. And so when you think about having something on blockchain, you immediately have innately the ability to fractionalize the ownership of whatever that asset is, whether it's cryptocurrency or it's a piece of art or it's or it's a mortgage. And so fractionalization is something we think about a lot. Credit unions do a lot of participation, so that's a very viable market for adoption of blockchain because they participate on all kinds of different loans. So I'd say that's number two. And then number three is really trading it. So being able to create a system where you can leverage the power of blockchain to trade assets. And that's ultimately our vision.
So interesting. Okay, so let's put these two things together, right? We were talking about AI, we're talking about blockchain. What does it look like when you integrate those two for your clients?
Yeah, that's 1 + 1 = 3. That is our synergistic model, right? How do you get in an automated, quick but accurate way to get validated data onto blockchain so that it can become immutable? So there's a tremendous number of generative AI tools that can help streamline that process. And then on the back end, to ultimately get to what we call a strong form efficient market or best execution, we believe that you have to drive operational inefficiencies out of the subsystem. In the strong form efficient market is basically says that anything and everything you can know about an asset is known and priced into that asset. So today we would consider the mortgage industry closer to a weak form efficient market, which is why everyone always has to diligence everything constantly to determine what's going on with it. So if you take that strong form efficient market, which blockchain can bring, that transparency and immutability, and then our second hypothesis is really centers around cost matters, which is this idea that if you had invested in two index funds, Vanguard and Putnam, and you had the same distribution of allocation, what's the difference in the net return to the investor? Well, the difference between the net return to the investor is just the operating cost. So if one fund is charging you 50 bips and the other one's charging you 75, if they're absolutely the same distribution of investable capital, then the guy charging you 50 bips is going to get a better, that fund is going to give you a better return. So when we look at the ecosystem, whether it's servicers, diligence, property preservation, foreclosure law firms, all these vendors in the market to make that loan go from origination to liquidation, that's where generative AI tools from our perspective going to help create more predictable outcomes by driving the efficiency and the automation of those processes instead of having humans or broken processes or disparate systems that can really drag that return down. So when you layer those two together, that's what we believe ultimately will create the opportunity to drive fixed income more to a retail investor. One last thing on this point, if you look at the stock market, 25 years ago, the percentage of retail investors in the stock market was very low. Today, it's like over 30%. I'm not going to quote the specific amount, but the last thing I read was like over 30% of the stock market is held by retail investors. Well, what percentage of the mortgage market is held by non-institutional investors? And so when you think about driving liquidity to the mortgage industry, which by the way, it's for all of our homes, we're paying the interest rates on it. And that risk spread is what we eat because of all that inefficiency. The more liquid it gets, the more capital that can come in and play in the market, the better the pricing will ultimately be for the consumer who is really paying the price for any of this inefficiency that we're trying to resolve.
When you think about, you started, or at least at one point you were an LO, and where you are
Yeah.
now, how do you think that your industry experience really informs, what you do at Rocktop?
Well, I mean, everything. I mean, that's really what Rocktop is. I mean, we're a team of athletes. We're, tech driven, but we're powered by people. We have a bench of highly experienced people across different sectors of the industry: capital markets, servicing, origination, asset management, default management. And so when you look at trying to accomplish our vision, which is a 10-year vision, that subject matter expertise matters to be able to understand the difference between what's a good idea, like theoretically, and how do you practically bring that to market. If you go in today and be like, hey, I built the best servicing system in the world, will you just swap your servicing system out for mine? There's like the implications of that are challenging. And so I think having firsthand experience across our senior leadership team and across the whole organization allows us to be a little bit more surgical in our solutions, because we kind of understand the problem, we know what is possible, and then we are the bridge to bring that to reality. So I definitely feel like the last 22 plus years being in the mortgage industry has provided the kind of the visibility to understand the pain points across the industry to hopefully be able to contribute to solving some of them.
I think that's really key. Actually, I mean, especially as you're talking about the very specifics, it's like, what that pain looks like. It's not some theoretical thing. It's something that you've had to live yourself. So I feel like that comes into play. Well, let me ask you this last question: is what advice would you give to other companies looking to adopt Gen AI and blockchain technologies?
First of all, I would just say be curious. Be curious about it. Don't assume that the way you do it today is going to be the way that you're going to be able to do it 5 years from now. Growing up in the industry, there was an adage of, it's just the way we've always done it. And, for a long time, the mortgage industry has worked. And there was always people trying to disrupt things. And I think that is the wrong approach to doing this. I think it's, how do we improve things? And so be curious about the possibility. I think being afraid or putting up the veil of regulatory or risk and compliance, which are all very critically important, could be a headwind for organizations to be late adopters or even get surpassed. So that's number one. And number two, just be intentional about it. You can waste a lot of time and money chasing white rabbits here, trying to find, these tools that are going to be a silver bullet. They're not. They're incremental tools that if deployed properly can work. So those two things that for now would be where I would focus. Have low expectations, go out, identify a real problem, solve that practically, and see if it works. And if it does, then continue to invest in it. And don't just wait for there to be that, center of gravity to shift where everyone's doing it. So now I'm going to get on. I think this is one of those innovation periods where it's just going to be too late. And we're here to help. I mean, obviously, that's why we're involved. That's why we're here today, is to let people know that there are folks like us out here that can help with that journey.
Well, Cade, I really appreciate you being on. Very interesting to me to learn more about what you guys are doing, and especially more about your vision. That 10-year vision is just so key right now, and pretty hard to do when technology is changing so quickly.
Yeah, no, it definitely, we have our work cut out for us. That's why it's called a vision, but we actually call it our working vision because little by little it's working. So we're very grateful to be on today with you, Sarah. It's always a pleasure for letting us share a little bit more about what we're up to.
Thanks, Cade.
Thank you.